Good evening, everyone. This is Dana from NexGen, and welcome to Me Inc. I hope everyone had a wonderful week. Monday, if you remember, we talked about being balanced as it pertains to being mindful. If you've not seen that video, I'll put the link above and also below. In that video, we discussed wellness dimensions. If you've heard the term money is not everything, to me that meant that there was a lack of balance. And being financially balanced encompasses more than just earning, saving, spending, investing, and in protecting your money. We're looking at financial wellness as it pertains to the whole person. So this evening, we're going to discuss how Angela approaches being financially balanced. Angela is very happy with her financial situation. It's not perfect, but her finances are in balance, and she is satisfied with the direction that things are headed. Even if she has financial challenges in the future, she has a plan set up to deal with it. For example, although Angela has overdraft protection in her checking account, she does not rely on it. She regularly monitors her accounts, and before she used her line of credit to pay her bills, she kept more of her money in her checking account than she needed in a typical month, and that was her cushion. So she kept some money in the checking account, but the majority of it went to her money market, as I talked about before. She uses her credit cards for convenience and rewards. And when she can, she prefers to use her credit card to pay her bills. She doesn't pay fees, interest, or late payments. She pays her credit cards off every month. And 4 of her credit cards offer cash back for using them. And some of the cards offer interest-free financing. So she's got all these things going for her. So that's why she prefers to use her credit card, and we talked about it in previous videos. Now, she puts her bills on a schedule so that she has them paid off at least 2 weeks before they're due. She keeps a journal and she has a money program for her periodic bills. For example, her auto insurance is automatically billed annually to her credit card. Of course, she has to make sure that she plans for an increase in that particular credit card. It's not unusual for people who have high incomes and have a lot of financial assets to carry big credit card balances. Angela refuses to pay high interest rates and to lose any sleep or over any uncontrolled debt. Now, speaking of sleep, Angela sleeps deeply and peacefully now. If she has any money issues, they're not significant, and there's never a situation where she doesn't have a reasonable solution. She knows that it's important for her to maintain her physical wellness. So she gets adequate sleep, eats a healthy and balanced diet, and is physically active every day and gets a annual medical checkup. And for her dental, she does it every 6 months. She is a big proponent of preventative medicine. Angela's mindful of bad habits like smoking, hard drinking, drug use, overeating, and recreational shopping. She does her best to steer clear of expensive, destructive habits. Because she's happy with her finances in general, she knows that she does not need these habits, specifically the recreational shopping, to escape or to feel good about herself. In contrast, if she really wants something, she went out and bought it. Her finances are strong enough to enable her to get those things that she really wants. This isn't about impulse spending on an ongoing basis, but rather having enough room in the budget to get the things that she really wants. She's in control, and money does not rule her. Sometimes Angela has episodes where she would spend more money than she planned to. And this usually happened when there were special occasions, such as birthdays that she didn't know about, that's not already on her planner, holidays, vacations, or other celebrations. Now, I know that we talked about Angela not going on vacations, so these were probably more than likely big business trips. So these events are not budget busters. She has enough flexibility built into her budget to accommodate the occasional spending spree. And that's where the savings would come in. Now, Angela is a natural saver, and this is one of the key habits of becoming financially balanced. Angela saves with a sense of purpose and without feeling any self-denial, feeling that she's denying herself. So not only is Angela generous with herself, she's also generous with others. She has certain charities that she supports on a regular basis, and she's generous with the people around her who are in need. She is only able to do this because the money is not taking away from her does not take away from her negatively. It does not negatively impact her finances. She gives with ease and she feels good about it. Now, her financial stability is so obvious that when other people saw it, they would ask her opinion about how she achieved it. And this is because they see her as someone who's figured it out as far as money is concerned. And she takes this as a compliment. So in addition to the compliments, being financially stable or financially balanced has its own rewards. Angela does not feel the need to spend money to keep up with the Joneses. So she's not going to spend money that she doesn't have and to go into debt. This money that she has as extra is going to go toward savings and investments. She doesn't need the toys or any trophies. She doesn't have to prove anything to her family, friends, or coworkers. And for example, there are car loans that you can get that you can finance for 7 years. Angela used to trade in her car every 4 years, which kept her in perpetual car loan payments. Now Angela purchases the car she wants, and she either pays cash for it, or if she finances it, it's going to be below 2%. And she keeps her car for at least 10 years. Angela consistently lives beneath her means. It's not a struggle for her because she knows that all things starts with making a financial start with having extra room for her budget for savings, investments, and paying off the debt that we talked about in the previous videos. It makes sense to her and it comes easy. As part of her intellectual and occupational wellness, Angela recognizes the importance of aggressive retirement investing and that it's a part of her becoming financially balanced. Now, in her job that she has now, she does have a retirement, but they also allow for augmenting it with investments. So she's investigated the health savings account that we talked about earlier and employer matching retirements and online brokerage tools. And because financial concerns don't distract her, she's able to give 100% to her job. She's not weighed down by emotional troubles of having unpaid bills or outsized debts to pay. She lives on less than what she makes, and she doesn't waste time feeling sorry for herself because she's not making enough money to pay her bills. This frees her up to do her job that needs to be done, and it actually keeps her open to bigger raises and promotions because she's concentrating on the job, not having financial difficulties. Now, furloughs are a reality for Angela. She doesn't worry about being furloughed now or losing her job because her finances are in balance. This is something that she had to do. She has sufficient liquid savings that she can live for years without a paycheck. This means that she doesn't have to tap into her long-term savings like her retirement plan. Bankruptcy is not even a remote consideration. The fact that she can live without a paycheck for an extended period of time makes it easier for her to do her job. Angela works without concerning herself with the threat of layoffs or even being fired. She will never be trapped by her job. This was important to her. And this is where being financially balanced feels good. Because Angela is already living on less than what she's earned, and we've talked about that considerably, she can even take a pay cut or transfer to a lower paying position without affecting her lifestyle. Angela has options and her finances are sufficiently under control, and she feels confident about her future. This is because she's, again, able to live on what she earns, has substantial financial assets that she is adding to on a regular basis. Now, she does carry debt on her car, student loan, and home, but she plans to have that paid off in less than 6 years. And we talked about that in a previous video. And she did this by calculating her net worth, and it grows substantially every year. Now, Angela knows that it's not about doubling her income each year, but it's about achieving consistent increases in her net worth. And these increases come from a combination of adding to her investments through regular contributions and through solid investments. Now, another, I guess we would consider a major marker of being financially balanced is to have a large amount of equity in your home. And that's if you have a home. Angela, as we said in the previous video, did buy a home. Now, she didn't make a large down payment on that home, but she is making extra principals on that monthly payment to accelerate her paying off the mortgage. Now, having that large equity means she doesn't have to worry about falling property values that we talked about in the previous video. So, no matter the fact that she did get a 30-year mortgage, that's her fallback. But by paying the extra principal, she actually has more equity in her home, which gives her options if she decides that she wants to possibly sell the property. Now, as I said before, Angela does have student loan debt, but her sons do not. She knows that the cost of college can be astronomical for her grandchildren. So she's making plans with her sons and their wives so that they'll be prepared. And this can be a combination of specifically saving money for each child through a college savings plan. It could be streamlining the parents' finances so that they're able to pay out the tuition out of their income, or it could be a combination of that and helping the child or children with scholarships that can help contribute toward the cost of their post-school, if you will. So overall, Angela has a strong sense that she's in control of her finances and that she's financially balanced. She knows that money creates options in life, and she's able to do what she wants, when she wants, on her own terms, and in balance with the other wellness dimensions. Thank you for spending time with us and watching this video. We hope that the information here is beneficial to you and that you're able to interact, put comments in the section below, share it. Also, if you haven't done so already, go ahead and like and subscribe. Now, I would like to leave you with this. Remember that the goal is to work to live instead of live to work. Take care of yourself and make sure to have a great weekend. See you next week.